You've seen NVIDIA dominate the AI and computing world. You've seen AMD rise from the ashes to become a powerhouse. But what if I told you that there's a hidden quantum computing stock that could follow in their footsteps? Enter Rigetti Computing, RGTI. Today, I'll break down the financials, the recent explosion in volume, and why I believe this company could be the future of AI computing. Let's go deep. Financial overview, strengths and weaknesses. Market cap for this one is $3.3 billion. This is simply the total value of all outstanding shares. It's calculated by multiplying the stock price by the number of shares. A $3.3 billion market cap places RGTI in the small to mid-cap range, meaning it's still early stage but has room for big growth. 52-week range, 99 cents, $21.24. This tells us the highest and lowest price the stock has traded at in the last year. With such a massive range, we know the stock is highly volatile, meaning it experiences big price swings, both opportunities and risks for investors. Short interest, percent of float, 21.6%. Short interest measures how much of the available shares have been borrowed and sold short, essentially bets that the stock will go down. A high short interest can indicate pessimism, but it also means there's potential for a short squeeze, where rapid buying forces shorts to cover, pushing the stock price higher. This is their major indicator of risk on. This is a very high short interest, meaning many investors are betting against them. This means nothing though. One piece of news that their chip has capabilities that is better than the other, and these shorts will be covered. Short interest ratio is 0.4 days, meaning liquidity allows them to cover quickly. Institutional ownership, 32.6%. This tells us what percentage of shares are held by hedge funds, asset managers, and other institutional investors. The higher this number, the more confidence Wall Street has in the stock. Takeaway: RGTI is in a high-growth, high-risk phase, with significant institutional interest, but a volatile trading history. Revenue and earnings analysis. Revenue. This is the total money the company makes from its operations. 2023. Revenue, $12 million. Breakdown, $11.1 million from the US, $913K from Europe. Expected to triple by 2026 to $35.4 million, meaning analysts expect growth. Why this matters? Growing revenue means the company is expanding its market presence and making more money. Earnings per share, EPS. EPS represents how much profit a company makes per share of stock. RGTI's EPS trend. Since the losses are narrowing, RGTI is on a trajectory toward profitability, something that could massively boost investor confidence. Takeaway: while the company is not profitable yet, revenue is increasing, and losses are shrinking. Positive signs for a growth company. AI early-stage companies pump so much cash into research and development that this number is often portrayed incorrectly. Key ratios and cash flow. Concerns: price-to-book ratio, PB, 18.43. This measures how much investors are paying relative to the company's net asset value. A high PB ratio suggests that investors expect high future growth, but it also means the stock is expensive based on assets alone. Price-to-sales ratio, PS, 157.9. This tells us how much investors are willing to pay per dollar of revenue. A PS this high means the market is pricing in massive future growth, or it could mean the stock is overhyped. Debt-to-assets ratio, 11.5%. This shows what percentage of the company's assets are funded by debt. A low debt-to-assets ratio is good, because it means the company isn't heavily reliant on borrowing. R&D spending growth, 439.4%. This tells us how much money is being reinvested into research and development. A massive increase like this is common in high-tech industries. RGTI is heavily reinvesting in quantum computing development. Takeaway: the company is spending big on growth, has low debt, but is currently very expensive based on valuation metrics. Volume explosion. What happened on November 24th? Trading volume, the number of shares exchanged daily. Before November 24th, 2024, almost no volume. This stock was flying under the radar. After November 24th, 2024, the stock exploded from under $2 to over $21 at its peak. Why? A mix of institutional buying, Microsoft's interest in quantum computing, and retail hype. What this means: when volume surges like this, it usually signals growing interest from major players. Takeaway: volume explosion often precedes big moves, either up or down. In RGTI's case, it suggests a major shift in perception. Analyst ratings and target price. What these mean. Price targets. Analysts set price targets based on expected growth, revenue, and future catalysts. Consensus. Buy. When multiple firms have a buy rating, it builds confidence among institutional investors. Takeaway. Analysts are overwhelmingly bullish, which aligns with the volume surge and institutional buying. The AI and computing space is dominated by giants. NVIDIA is the king of AI computing. AMD is the king of price-to-performance GPUs, but both companies were once underdogs. NVIDIA was nearly bankrupt in the early 2000s. AMD was struggling until Ryzen saved them. The key to their success? Being ahead of the curve. The future is quantum computing. We're entering a new era, quantum computing. Classical computing has its limits, but quantum computing could revolutionize AI, simulations, cryptography, and more. Right now, the big players who are Google, IBM, and Microsoft are investing billions in this technology. But guess who's a pure play in this space? Rigetti Computing. Why Rigetti could be the next NVIDIA or AMD? They are the first mover quantum computing pure play on the NASDAQ. Heavy institutional investment is already happening. BlackRock, Vanguard, etc. Their R&D spend is growing faster than any other quantum computing company. Quantum computing adoption will be driven by AI's exponential demand for computing power. Retail and hedge funds are paying attention, hence the volume surge since November 24th. I'm not saying RGTI is guaranteed to become the next NVIDIA or AMD, but the setup is eerily similar. A disruptive technology, heavy R&D, and increasing investor interest. If you want to catch the next big wave before it goes mainstream, Rigetti might just be that opportunity. But as always, do your own research before investing. If you want me to go deeper into the quantum computing revolution, let me know in the comments.